that this morning, and I had this Mr. Roboto thing in my head, and I was going like, Don, you know what? We're going to use that today. Why not?
I'd appreciate it. I love it, Raleigh. That's great. That's great. Yeah, no, we've got a great show today. We've got a special guest, Jeffrey Muller, with Radar USA. He's going to be talking about a deal to get in on the ground floor of next AI play. So that's great. And of course, we got Roger and Celeste joining us. We got a lot to talk about. I mean, the debt ceiling, we got a vote coming on today. I think the one thing that we can all take away from this is that absolutely nothing changed, right? I mean, I think whatever hard negotiations the Republicans did, I mean, maybe they cut spending by 1/10 or 0.2%, I think is what. Absolutely nothing to slow down the trajectory of government spending and debt, right? So, and we're going to talk about that, and we're going to talk about the Fed and all that. And in just a few minutes, I would like to welcome everybody on. Roger, Celeste, Jeff, if you're on, let's get going.
Hey, everybody.
Hi, everybody.
Celeste.
Hey, gang. How are you?
Roger.
How's everyone doing today?
Doing fantastic. Roger, you in New York City?
No, that's a backdrop. That's a Los Angeles backdrop, actually, downtown Los Angeles. It's one of the few that I use, but I really like this one.
I love it. How are you doing, Jeffrey Muller? Good to see you.
Good morning, everybody. How are you?
How you doing, Jeffrey?
Good. Very good. Thanks, Don, for having me.
Oh, you bet, Jeff. It's great to see you here. Yeah, we'll looking forward to hear what you have to show everybody. It's not that often we get to talk about some private placements and bring that kind of opportunity to everybody. So really looking forward to that. But before we dive into that, Roger, Celeste, why don't we just take a few minutes here? Of course, we've got the debt ceiling debate coming on, and we've got the Fed looking to the tables have totally shifted on the expectations, at least the market expectations for the Fed. And, as a backdrop, just so we can, I'll let Roger, why don't we start with you? I'm curious as to your thoughts, but I'm going to share my screen. I like to, where is it? Where's the share screen? Oh, there it is. It's right there. All right. So, and here's what I'm talking about when the landscape has shifted significantly. Prior, this is the I look at this a lot of time with you guys, right? And this is telling you how the Fed funds futures are pricing in a rate hike or a rate ease. And right now, this down here is would be a cut, right? And this right here is a pause. And you can see how where the odds of a pause were, a month ago at 64%. Now they've collapsed down to 33%, and a cut is completely off the table, right? And now we're looking at a hike of 2/3 probability of a 25 basis point hike, and even higher rates are possible as a result of that. Although not for the next one. It was interesting. Yesterday, they were pricing in odds of a 50 basis point hike, and now that's off the table. But it's the pivot is off the table, and a pause is very unlikely. Roger, what do you think about all this?
Well, I'll tell you exactly what I thought about it, but I wish we had a video of our session from 2 weeks ago, and when I was yelling and screaming and saying this is completely going to turn the other way, and there's no way, and I said that it's very unlikely that this is going to stay. Now, here's what I'll tell you. What was shocking to me? Okay, this was shocking. What was shocking was a few days ago or last week. Days just roll into each other, but it was last week. I think it was last Thursday or Wednesday. The minutes came out, and the minutes, okay, were complete. So for anybody that doesn't know, I mean, most people know this. The Fed meets, they take minutes, we get the statement, we get the report, and then a month later or 3.5 weeks later, we get the minutes, which is what they were talking about to make that statement. So, according to Mr. Powell, he said last time he was very confident that they're not going to raise rates, and they're not thinking about or considering raising rates on the 13th, 14th of June, which is coming up in 2 weeks. Now, I don't know if anybody had a chance to read the minutes, but the minutes were completely contrary to what his statement was. They weren't even in the same world. Most of the Feds were like, we still need, basically we still need to keep raising rates. And that was my position 2 weeks ago, that I said that anybody who thinks we're not going to need to raise rates is completely out of their mind. We're in a completely inflationary environment. Everything is slowing down. I mean, things are not moving. China is right now slowing down. Japan is slowing down. US is slowing down. Europe is slowing down. He didn't just lie. He lied. He just straight up lied. I guess that's the best way to say it, Ray. He lied.
He had the window dress, right? I mean, it's optics based on the market's reaction right then and there, right?
Well,
I think that's what he's focused on. Yeah.
I'll tell you what, I don't want to get too deep into it. I want to give people their time, but in my opinion, you have to read between the lines. The Fed is right now, what the Fed is really doing is they're trying to buy as much time as possible because they're trying to see which way we go. But the problem is, road one is recession. Road one is inflation. I don't see the rainbow and the fairies and all that good stuff behind us. So anyway, sorry, I couldn't hold myself.
I think that's great. And I think they're both the same road, right? I mean, that's what stagflation is, right?
Right.
It's inflation and recession together. And then I rant, therefore I.
That's great.
Yeah. But I'm very frustrated with the Fed, as you could probably tell by how I'm talking about this.
Well, I think they're headed up to easily to 7%. It's this inflation, the inflationary fire that they have to address is just going to keep raging, and we're looking at least an early 80s style recession, but that's going to be along the lines with a lot of inflation as well. Celeste, what's your read?
Well, what I'm doing is I'm writing down what you just said, Don, because I really value that. Going to 7%, looking at the 80s for kind of repeat of that, because I don't really listen to a lot of what they're talking about. From my personal perspective, I would say I don't see how they could not raise rates. But if I look at what headlines say or what the predictions are, it varies. So, but what I like to do is I'm very careful who I listen to, and you're one of them, Don. So right. I think that's a better prediction of where we're heading to is the 7%, as opposed to what they're predicting and what they're pricing in the market. And then how I use that information. So when they're wrong and the market adjusts, I'm already prepared for it and I'm trading accordingly. So I think that was well said. It's two different roads, or the same road, however you want to say it, recession, inflation. It's not an easy place where they are. And on the other hand, we could argue too, well, they didn't put themselves in an easy place over the decades either, but that's probably neither here nor there. We just have to deal with it and make money off of it. That's
right. And, we've got to that inflationary impulse right now, you've got, once this debt ceiling gets resolved, right, and it's clear that nobody negotiated nothing. I think they get together and like, hey guys, we got to make this look like we're putting up some kind of effort. You've got your constituents, I've got my constituents.
I think
let's make a lot of drama. But,
I think that's like 90. I think you're more right than even you believe, Don. I literally think that's what they do. I think that's exactly what they do.
And here we are, and it's we're off to exponential. So the one thing that there's fiscal and monetary policy, right? And we haven't heard a whole lot about those two being in sync, right? Well, now they're completely out of sync, right? So on the monetary policy, they're trying to fight inflation and the consequences of past spending, and now we've got another $1 trillion in debt that we're going to see probably over the next week once this thing gets resolved, and then another $4 trillion over the next few months. And that spending, that fiscal stimulus, that's something the Fed has to worry about too, and they almost have to fight the effects of that. Where this thing goes, it's hard. And yes, and then of course you got the whole AI thing, which I don't know which is a great segue. You got the whole AI bid to the market, right? This kind of upstream. You've seen NVIDIA as an upstream player. Developing the processing power to develop these AI systems, and you're starting to see it spread down through the midstream players that are offering these applications. And with that, Jeffrey, I'd love for you to jump in right here now and talk about your solution and how you're using AI to solve a very real problem.
Thanks, Don. Appreciate it. So for everybody out there, my name is Jeff Muller. I'm the CEO of Radar USA. We are a new to market company that I'd like to call us a technology-enabled security service provider. What that means, we have a full spectrum solution. We have a citizen-facing situational awareness app that citizens can have. And then on the far right side, we are endpoint technology. We have software, AI-enabled software. It's really machine learning, computer vision, and a bit of AI all thrown in. We're making dumb cameras smart. There's big cities have 30,000 plus cameras, every one of them, and they're not using them effectively and efficiently to protect our citizens. So we offer the ability for our citizens to interact and have better communication within their communities, and then also with the local police.
Right, and so it's also it's very much bottom up, right? It's not like you're pitching to the federal government to roll out a panopticon
right.
of surveillance like they've done in the UK, right? I mean, it's very community. Effectively, you can go into a community or organizations within a community and say, look, you clearly got a problem here that needs a solution. Here's a way for your citizens to voluntarily log in, and with enough uptake, you've got a real look at what's going on in the community, right?
Yeah, absolutely. And we're engaged at the tactical, the local level with religious facilities. Obviously, there's heightened concerns and threats to religious facilities throughout the U.S. We're engaged with communities, homeowners associations. It could just be a block that wants to be able to engage within their community, have the ability to opt in or not to share cameras that they have on the exterior of their homes or that they might have in common areas, so that they can share information and better, really have a look at what's going on in their community. Obviously, cities are a huge target for us. And we're engaged with Chicago at the city hall level, with New York at the city hall level. So yeah, we can scale this all the way from a single facility all the way up to a large city.
Cool. Well, I think we can talk a little bit more, just so everybody knows what's going on here. So you guys, as a Radar USA, is raising capital. And you're doing it through a Reg A offering, which is it's like a private placement, but it's a type of private placement with a lot more disclosure than you get with a regular private placement. So the SEC allows anybody to invest in. There's not the high income tests and asset tests. You just it's open for everybody. And I'll get some of the stats because I know these questions are going to pour in. It's like $1,000 minimum investment. It's $1 per share. Yes, anybody can invest. Whether or not you can do it through an IRA depends on your IRA holder, and there's a process there. But I think I'd love to talk. People have some questions about the deal and those sorts of things. But I know you got where you're going to share. You've got a video that kind of helps describe, I think, what's your solution, right?
Yeah, I've got a short video. I'd love to see if we can pop up, and that really kind of runs through. In a short amount of time, everything that we need to explain it. And let's see, just about to pop it up here if I can share my screen. There we go. And can you see that okay?
Yes.
Yeah, we sure can.
Beautiful. Here's what I got to do. There we go. And I'm going to go ahead and play this now and then be happy to answer any questions.
All right. Awesome. Thank you.
Life, liberty, and the pursuit of...
This is CNN Breaking News.
I'm Brianna Keeler. Wolf Blitzer is on assignment. You're in the Situation Room, and we're following multiple breaking stories, including a tense situation in Illinois, where officials say at least 4 officers and multiple civilians have been struck by gunfire.
How can we take back the American dream? The answer is in the palm of your hand, your phone, the internet, advanced artificial intelligence software, all in one platform. It's called Radar USA. Former FBI Regional Director and Interpol Counterterrorism Chief, and now a security consultant for Fortune 100 companies and governments worldwide, CEO Jeffrey Muller talks about the merits of Radar.
The time is now. We cannot afford to wait for reforms. Having spent 35 years in law enforcement and global security, I can assure you that the technology exists today to help secure our schools and save children's lives. This is why I became the CEO of Radar USA. These technologies offer a full spectrum solution that can identify a weapon and trigger an alert to lock down a building perimeter and inform 911 of a potential threat. An app on your phone that has a panic button tied to internal cameras that can be shared with law enforcement and provide better situational awareness for police monitoring the shooter's location should they breach the perimeter, and for teachers and students so they can safely evacuate the building away from the threat.
On our platform, we integrate real-time data from private and public security cameras, thermal cameras, home alarm systems, and recording devices. We then add artificial intelligence and analytics functionality to analyze the data that comes in. Facial recognition, license plate recognition, image and noise analysis to achieve shot detection correlations, behavior analysis, and weapon detection. The platform then connects users directly to law enforcement, sends out an SOS alert, geolocation data, and direct messages to enable a rapid response with greater situational awareness.
The technology is here today to help prevent a tragedy tomorrow. I invite you to click on the link below to learn more about it.
Excellent. Thank you, Jeff.
I couldn't have said it any better myself, Don.
Yeah, no, and I think, well, there is the, there's the one half of this that, I think everybody on this, we're not going to rant, therefore I am
Right.
on this, but I mean, there is a clear kind of inability of local and regional and from top down security and policing that is just not solving the problem, right? I mean, it's whether they're getting defunded or simply not up to the task or whatever. Here in Baltimore now, in Baltimore City now, they've got a curfew. You've got just hordes of just mobs attacking people, right? I mean, that is not something that we experienced growing up, right? And then that's just a completely different dynamic. And if a school, if you imagine, a community with a school and homes being voluntarily able to get into this, and then have AI sync up the information between their I suppose like their Ring doorbells, between all the video cameras they have and what the school has available, and then whatever the community has, to get all that information in one and then respond, right? Because AI can tell whether or not you're packing, right? If somebody's got a weapon, if they can, there's facial recognition now that you can tell that they can cross-reference. It really allows those threats to be identified early and a lot of uptake, right? And isn't there a community in Mexico that talk about the results of that very thing happening in a community in Mexico?
Yeah, so prior to bringing this to the U.S., we really operationalized it in and around Mexico City. And one particular area, Benito Juarez, we had a 45% reduction in crime in a little over a year. So we're deployed to 10,000 plus cameras. The citizens engaged. In this case, it was bought by the government for the city, for the citizens. And yeah, we had an incredible reduction in crime. And not only that, even to me, as important, the citizens were asked, they were surveyed about their feeling of security, right? What's their comfort level? And it went from the low 20s to 72%. So what that means is they're getting out into the community, they're spending money, they're engaging, stores are staying open later. You see areas in the US where, like San Francisco, stores are closing now because they're just getting hit time and time again by these mobs that you're talking about coming in and just stealing blatantly from them. So yeah, that overall level of comfort, quality of life increase, and saving lives, that's what we're focused on.
Right. I imagine you've got a salesman talking to somebody in San Francisco.
Yeah. we sure do. Yeah.
Yeah. So, and what are some of the barriers? So everybody, you can, guys, we're going to spend just a little bit more time on this, and then we're going to move on. But you can see there, Raleigh's posting some links so you guys can get on the Dealmaker page, find out a lot more information. So what are some of the hurdles? So imagine a rollout in a community, right? I mean, who's how's the bill distributed? Like, how much would I pay? Do I just pay like a monthly fee to get mine, and then I volunteer to let it be shared with others? And how's that rollout go? What's that sales process like?
Yeah, if it was in a HOA, a homeowners association or community, generally they're already paying some type of fee. So that would just be distributed, throughout each of the individual residents, and they could have access to it. And again, they could opt in to it or not, right? So they don't have to share their camera information. They can share it just as you do now with some of the systems that are out there.
Yeah.
The key for me is you can empower a teacher, for example, the minute or the second an individual pulls a weapon out of a vehicle in a parking lot, we immediately detect that weapon. That information, we can do a lot of things. We can lock doors, set off alarms, notify police. We can notify teachers so that if that individual is trying to enter through the northwest side of a large high school or school, the teacher, instead of locking a flimsy wooden door, can evacuate her class away from the threat, right? So you can move and give yourself more time. And then we also send that information to the police so they can have a better understanding of exactly what the threat is and get there quicker. So that kind of empowerment for the citizenry is what we're looking to do. And so, yeah, it wouldn't necessarily be an individual purchase per home. It would be more of on a community basis. But again, we're able to scale up and down.
So the big sale would be either to a bigger church or a school or some kind of something with a pretty large footprint, and then it gets adapted. And the benefits scale up pretty quickly.
Right.
And I think
universities are a great place, Don. We were just up talking to one in Baltimore. I won't name them who they are, but they're in Baltimore and they have over 1,000 cameras themselves. So that's a perfect, location for us. Students can have the app so they can actually have our distress button in their hand instead of having to try to get to one of those blinking blue light specials that are 200 meters apart. If they were to get attacked, for example, they could hit the button, security personnel would get that notification and know where they were within a meter, right? And they get it immediately, they could respond to help them. So a lot of advantages.
That's great. And I think that your that threat detection and your ability to integrate that information, kind of more of a comprehensive intelligence, is what sets you guys apart from like Ring, or some of those other services, right? That it's how you use AI to get better situational awareness.
Absolutely. And we also have the ability, I think Eric asked about, can we detect concealed weapon? Our system does not, but the advantage, it's kind of an add-on. We can work with companies that have, portal-based concealed weapon detection. There's new companies, there's new tech coming out all the time where they're using radar and LiDAR to be able to detect at distance concealed weapons, gunshot detection, et cetera. We can integrate all of those into what we call a single pane of glass, so that all of those sensors can be pulled in onto our dashboard as well.
Right. Celeste, right, that's great. And hey, everybody, you see Raleigh dropping the links there. I really encourage you guys to get in. Celeste, Roger, if you got any questions for Jeffrey here?
Well, while I was watching the video, I was thinking about how all those video cameras reminded me of what was futuristic 10, 15 years ago. There was a show called Person of Interest, and they have all these cameras focused on and I swear to you, it was like the first episode. It was like how they were doing all that. It was very, very, I find that very interesting. So I applaud you, Jeffrey, for putting this together. And I think this is now one of the reasons why I left at Los Angeles was because of the crime rate there. And it's not getting any better. And once I realized that, I fled. I lived there for over 45 years. So for someone like me to leave like a lot of family, a lot of memories, a lot of friends, the crime rate, you got what the government is doing is just not enough. And I think this is something that we must do. Otherwise, it's just going to get out of hand, especially like you mentioned, Baltimore, San Francisco, Los Angeles, big cities that have a lot of crime rate that just wasn't there 20, 30 years ago. So I think this is something that has to happen. It's a must. And this is a great way to get in on it.
I agree with you, Roger. And again, the camera systems are in place. A lot of times they're being used forensically after the fact to, catch somebody to see if they can see what happened. We're trying to prevent it from happening, right? We're trying to use enhanced technology to be able to prevent it from happening and save lives.
Yeah.
And soon, I think with the advancement in AI, a person can't look at 100 cameras at once and look for certain things, but an AI can. And I think that's where I mean, I think this is going to be the future, no matter how you look at it. It's just a matter of who comes out with it first.
Yeah, and Roger, just one, if we have time, I was called out to do a threat vulnerability assessment of a large property management company in Texas, and they were using one of the traditional security companies. They had one operator looking at over 300 screens. You know, studies have shown the effectiveness of an operator looking at 50 screens is down to 4%. So I don't even know what it is at 300. But what we do, they don't have to look at every screen. They need to have one screen. The AI looks at all of the cameras and only notifies them when there's something that they need to act on. So that's the difference.
Yeah.
Beautiful.
Well, I would just add that I think it is the way of the future. And Brett's typing in there, hey, I'm just going to stay where I am because it seems pretty safe there. That's what I thought about our neighborhood. And, you know, I didn't know, I wasn't even thinking about this, Jeffrey, when I talked to you about this a few weeks ago, but, you know, we have an HOA. I'm like, I need to get this information to our board because we have had break-ins. We have had them at 2:00 in the morning into the cars that are parked. We've had it in neighborhoods, and, you know, it's not a shabby area. You guys would know some of the names of the people that live around where I live, but so it's happening. It's, you know, I'm in the Midwest, and so it is, you want that security, and not only for ourselves at our age, but our children, our grandchildren, and their children, and so on and so forth, because it's just, sadly, we're not actually, you know, we're getting so much innovation, and that's fantastic. Medically, it's fantastic. But, you know, all of the things too around us, that also is increasing that crime. We're seeing it, we're living it. Are we going to go back to the 70s and 80s that somebody was typing in there? And I was agreeing with you. Wow, we just didn't realize how good we had it then, right?
Those were good times.
Those were good times.
Back there.
Those were the good times.
Back. So it's just like crypto's not going away. You know, this AI is not going away.
Mm-mm.
And this is the wave of the future. And you get somebody like Jeffrey, who has all of this experience behind it. I mean, wow, that's phenomenal. And the little bit that I've seen about that, it's really, I'm in. I love it. I think it's great.
Celeste.
Yeah.
Awesome. Okay, well, Jeffrey, that's all the time we got right now, but I really appreciate you hopping on. You can stick around if we want. I'm going to turn it over to Roger right now. I know you've got some some sectors that are looking pretty downbeat. And, you know, I'll tell you what, Roger, this morning we had, I do a sizzle stock session with my Telegram community, and somebody wanted me to take a look at Catalan, and it turns out it was one that you'd shorted. It looked like the clear short to me, man. It's got this building momentum all the way down, and you know, I think it's going to keep going. But with that, why don't I turn it over to you right now?
You know, speaking of that stock, what really screwed me on that stock, this is something I've never seen before. They delayed their earnings 3 times. And
that's not good.
No, exactly. So listen, this is a great conversation. And for folks to pay attention to. So I'm very diligent before I get into a position. I look to see the earnings date, and I look to see multiple sources. So I get into this position. The position's moving in our direction, and it's a short. And I see at the bottom of my bar chart, it gives me like a list of all the stocks that's coming out with earnings. I see Catalan. I'm like, wait a minute, something's not right. I go to Google, I type it in, and I see that they just keep postponing it. And I don't know if they even released yesterday or if they postponed again. But that's like the worst news. But my rule is don't stay in a stock during a window period of earnings, like 2 days before, 2 days after, whatever. Because I don't want to have a volatility for all the reasons we all know.
Sure. Yeah. You don't know how.
You just don't. It's gambling. You're gambling. You're gambling. Yeah. So I didn't want that. So I got out, and I don't even know if they had earnings or not. But this is the 3rd time that they're. I mean, this is very unprofessional, and we're talking about a public company here. So anyway.
Oh yeah, no. Somebody could be going to jail after 3. There's somebody's hiding something, man, or uncovering something that was hidden in the past, and they're figuring out how to deal with it. That's exactly
right.
What do they do? I don't even know what they do.
Medical devices, some kind of medical devices.
They are in southern Indiana. Just gonna.
Oh, interesting.
Anybody you know there?
Oh yeah. Oh yeah.
You really?
Let's just say that there is a big difference between Eli Lilly, that is in Indianapolis, and Catalent, that is in southern Indiana.
Oh yeah. You're talking about
Oh yeah. So yeah, I'm very familiar. So good short.
So Roger, you mentioned that you want to talk about some sectors that some beaten down sectors. What are we looking at?
Yeah, so there's a couple of things, beaten down and beaten up, but before beaten down, I want to show you Infotech. It's in the same kind of, we're all talking about the same thing right now. I want to show you how crazy this is. So this is the number of stocks in the XLK, in the XLK Infotech sector. And we all know it made a new swing high the last few days. Now, remember, the number of stocks is equal weighted, okay? And the number of stocks, when it's equal weighted, those five or six stocks that have been really rallying hard can't give us as much of an influence. So notice the top, this last peak, the price action here. Let me go to the price action. The price action went higher, and I'll explain where I'm going with this, and then I'll explain the weak sector. So if you look right here, you will see the price actually made a higher high, but momentum levels couldn't even do it. And I mean, we went all the way up. So not only do we have divergence, but we have literally divergence between price and momentum levels on an equal basis. My point is, this sector is so overbought and so overdone that we couldn't even match the previous high and go higher. We couldn't even do that, and now we're coming down. So I think the party is over, and that brings me to what I wanted to discuss, the weakest sector. A lot of times, what folks don't realize is, well, maybe they do this year because it's happening more than ever. We're having crazy sector rotation. And when you see money being, and maybe this is like the perfect example that happened the last 2 weeks, because semiconductors and technology just skyrocketed, NVIDIA, chip stocks. And a lot of that money came out of the following sectors. Let me show you. A lot of that money came out of utilities sector, because that's a very defensive sector. And it looks like it's bottoming out, bottoming out right now. A lot of that money came out of the consumer discretionary sector. Look at that. I mean, this thing has been beaten to death, especially in this economy when consumer staples are, as our previous conversation about the Fed and interest rates, and healthcare too, it's been beaten down to death. So what my point here is this: I think if you go to the QQQs right now, I think a lot of the money that you've been seeing come into here was coming out of those sectors. And I think right now you're going to see the opposite effect. You're going to see a lot of money coming out of the NASDAQ and the SMH. Look at, I mean, these type of when I see moves like that, that makes me very, 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 very nervous, because that's just not sustainable over time. I mean, it's great to catch it, but it's just not sustainable. So in my opinion, we're going to see a complete reversal. We're going to go back into this channel, and a lot of the sectors that have been gaining strength, like semiconductors, consumer discretionary to a lesser degree, communication, and infotech, is going to, the Qualcomm put, great, glad to hear that. So one of the things that I like to do when I see a strong sectors like this, I like to short stocks that didn't get any upside with the rest of the sector. And Qualcomm was one of them, and there was one more. This one here, I think, is going to go all the way down to the base. And another one was, what was it? Could someone help me here? SEM something. There was two semiconductor stocks. I think it wasn't Taiwan Semiconductor. It was something else. I'm sure somebody will post it up here in a minute.
SMCI. There you go.
Leslie.
That was not it. It was, but Ray got it right. It was TSEM. It was this TSEM. It was that one. And you could see. So what I like to do is, when I see a huge rally in semiconductor stocks, I'll find the weakest semiconductor stocks to short. So I'm always looking for the opposite, because there's a, people are like, oh, I missed the rally in Nvidia. No. Find the weakest players in that sector and do the opposite, because they're getting a sympathy play, because a lot of these stocks are in those.
Yeah, they're bid up more than they should be anyway, right? Yeah.
Right. People are getting excited. And also they're in the semiconductor ETF and in the technology ETF. And you can't lag behind. It has to be arbitrage to the upside or the downside with the rest. I know Don understands exactly what I'm talking about. I know Celeste understands. If some of you don't, basically, they have to keep the price even amongst all the different sectors that those stocks are in. Otherwise, the price will be mismatched in the short term, and they can't have that. So you're going to get excitement in all the chip stocks when one or two chip stocks does well. So it's a very good way to play and say, instead of complaining that you missed out to the upside, find another stock in that sector that's doing completely long-term, completely the opposite, and take advantage of that to the other side. So
yeah, those tech names, they definitely look overdone. I'm just scratching my head. This AI has me nervous, right? And what it can do, and just how much of a little mini mania is going on, and what that can spread. But no, they all look very toppy. I'm with you 100% on that.
Yeah. So I think we're going to see a bit of a disappointment for some traders and a bit of a reversal of fortune. Between I think we're going to see a complete reversal of what happened the last 2 weeks. I think we're going to see tech decline, and I think we're going to see I think we're going to see a lot of defensive sectors rally, especially in light of what we're seeing now. I like bonds long right now. I like bonds long a lot, because I think the closer we get to this in the next couple of days, the closer we get to the solving this debt debacle, the more upside we'll get, because interest rates will see, long-term rates will see a little bit of relief and start declining back up. So I think rates will start declining, interest rates will start declining, bonds will start going up, and I think we're going to see with that consumer staples, healthcare, and utilities move higher as well. Before I conclude, I wanted to show you some seasonality. Do I still have a few minutes, Don?
Why don't you take like a minute or two here? I want to go to Celeste.
Okay, go for it. Go for it.
Oh no,
you can. Did you want to? No, go ahead. Yeah, you can take a little bit more time.
Gotcha. Gotcha. Yeah, that's all I need. I just need I literally just wanted a minute, because I wanted to show you guys the seasonality for now. I know we're coming into this kind of midweek, so this is all the way from the 27th to the 6th of June. 27th of May to the 6th of June. So this encompasses the beginning of next week. But as you could see, the next few trading days, for the most part, there a lot of randomness, not a lot of directional bias in either way. There's a couple of good things here that I'm seeing in real estate and energies ending this week. But for the most part, real estate is good. Yeah, real estate and energies. Everything else very, very choppy, very uneventful, not a lot of directional bias, which doesn't surprise me in light of the fact that it's a short week, and usually short weeks are fragmented, which means you don't get a lot of funds coming in till end of the week, and then by that time the party's over. Sorry about that. I just wanted to give you guys.
No, that's great. Thank you, Roger. Thank you very much, man. Always appreciate your insight. Okay, Celeste, you want to talk a little bit about cycles and balancing short-term versus long-term views? Let's hear about it.
Yeah, let's do it. It says that I can't share screen until Uncle Roger stops.
Come on, Roger, quit hogging the screen.
Sorry about that.
It's just the rules of the Zoom here today.
Yeah, I didn't know how it works. Go ahead.
Okay, let me get the right one here. So you should see my screen now. Okay, there we go. Everybody see that screen okay?
Yep.
All right, great. Yeah, I wanted to just take a little bit of time and share with you kind of some time frame trading using a longer term view to help you in the short term, and particularly focusing on options, since that's what I do, swing trading options over and over and over again. But I thought it might be helpful to show you guys this, and hopefully this will help you, because what it is basically, I remember, I tell you all that I listen. I really do. I listen to a few select people. A couple of them are on here with me right now. Another person I listen to is Chuck Hughes. I remember he said, it was months ago, he said, hey, the 10-month moving average has just, signaled a buy. And so I hadn't actually heard that one before. So I wrote that down, and I'm showing it to you here. There are other long-term indicators that I use personally as well. I know Scott talked about some of them as well, and it was just really helpful. But the reason I want to bring it to your attention is because I want to show you what it does for me me and giving me confidence. This is a monthly picture of the SPY, the ETF, and sorry, I don't have my little highlighter here, but you can see on the kind of bottom left there, the green boxes that I've kind of highlighted. Even at the top, where you can see just that downturn. I didn't get a green box on that one, but just kind of using that 10-month on a monthly. It's just a simple moving average. You just pick the 10 on simple moving average, and you can kind of see over, and that's over what, like 3, 4, 5 years. That's a lot of time. But if you look at a perspective like that, it just helps give you calm in all of the chaos, like debt ceilings and interest rates and Fed people speaking and everything. Gives you calm, a calm way to trade. So, and looking at, so I just bringing up Lilly, we talked about Catalent, talk about Lilly, and I'm just mentioning this one because it's something that I talked a lot about for all through 2022. But you can see here, using that 10-month moving average, even when the markets were like, crashing, we're in this bear market, it was problematic, it was difficult to trade. Getting a 10-month moving average on your chart it just clears out the noise and shows you buying opportunities. I'm going to get down to swing trading here in just a second. Once I bring the time frame down a little bit, I'm starting with a big time frame. You get the idea, time frame trading, starting with a big time frame, coming down to the smaller time frame. But look at the opportunity in there. If you can trade, you can hold it long. Of course, you can buy the stock, you can collect dividends, but there are multiple ways to trade options with that. So here's a weekly view of Lilly. So bring the time frame down, and you can see that's a lot choppier. It's a little more difficult to get the idea of where a trend is. Maybe you can kind of see it here back in the 2020, 2021. You can see some trends there, going through COVID. All that kind of moving sideways. You can kind of draw some things on there, but really that monthly perspective really gives you a great clue. Here we got this weekly just moving up. And I would agree with some of the things that we've already talked about today, that's kind of a parabolic move, for Lilly, even though Lilly is dramatically different from Catalent with the types of drugs, the way they run their business, debt.
Yeah, I think that's an understatement. It's like apples and oranges.
Understatement. But that's what we've talked about on these programs too, the differences between a good, solid company that has made good choices, even over COVID, and companies that have not made good choices. Same sector, good choices, bad choices, and it plays out in their ability to produce. How about NVIDIA? Do you feel like you missed out, the FOMO? Oh, rats, I missed all that. Even though Roger was talking about NVIDIA for a very long time. Did you listen? Well, what if you had a monthly chart up with this little simple 10-month moving average, and you saw NVIDIA way back when he was starting to talk about it, and you could see that it's making these moves? Would that give you confidence to trade long on those options, to do that? I mean, it certainly gives it to me. And that's why I'm sharing it with you all. How about, we've heard a lot of talk about, the tech sector and discretionary and with the communication services, just really being the ones that are, taking us up this year. And that's true. But there are all these other stocks, and you might want to take a picture of that, making 52-week highs. But there's more to this list of stocks than what you see right here. I'm going to show it to you in just a second. But it's interesting. Now, I have traded quite a few of these stocks. I own several of these stocks and have for a good while. So I'm trading options. I'm collecting dividends. I'm doing the whole gamut, whether I'm buying calls or selling calls up at the top, or if I'm selling puts at the bottom, buying puts at the top, all types of things, ways that I'm trading these tickers. So you see healthcare has quite a few, on the list there. So those are the stronger companies. Zoetis, animals. Okay. So you can see there's just, industrials. Take a look at those. I mean, you look at the sector, the industrial sector. I mean, it looks awful. You look at some of the other sectors, for the month of May, it's awful. The only thing that is up are the tech. But here are a list of some strong stocks if we're trying to separate, the good from the bad. Now, so say you're like, well, shoot, I missed out, on NVIDIA. What about some of these others? I see, Starbucks and Ulta. are on here. Let's look at those. Well, here's Starbucks. Here's a monthly on Starbucks. Does anybody want to go long Starbucks right here? Probably not, because if you look at that 10-month moving average, you know, it's right here all the way at the right, you know, hitting down there. So it's like, maybe not just yet, but hey, would Starbucks at some point turn around? Yeah, it could. And how many months, if you just look back on that chart, how many months would it take to get it, you know, turning around for you, something that you might want to trade? It might be something you keep on your watch list for months and months and months ahead. How about the chicken company, Tyson? Well, it's well below its 10-month moving average. But you know what's interesting about Tyson is that some of their insiders are buying right now. And insiders only buy for one reason. They buy because they think their stock is going up. Well, is it going up yet? Well, I don't know. But here on this monthly, you know, it's not showing me that turnaround, but those insiders are buying. Okay. Something you can watch on a smaller time frame if you're time frame trading. You look at this, you see this on the monthly. Where are you going to start to see the turnaround? You're going to start to see it in the smaller time frame. So if you look at this on a weekly, you look at this on a daily, you'll start to see if and when it'll turn around. Well, here's Alta, the darling. Look at that, made a 52-week high, pretty much, I think it was like May 1st. Boom, that's not very pretty. Down well below that 10-month moving average. But if you come all the way over to the left and you look at kind of what's happened before to Alta, could that 10-month moving average be something that could help you, you know, in the future? I am just literally sharing this with you because I think it might help you, because it helps me keep noise out. You know, I was saying earlier, I don't so much listen to the headlines. We own one TV in our house. And we never have the news on. I never have the news on. I'm very selective of what I listen to and who I listen to. So now here's something.
So what do you see for that's awesome, Celeste. What do you see for June? What's coming up? If you got if there's something you would do in June, what would you do?
Well, I would first of all, I'd pay attention to this chart. This chart says that every time that the NASDAQ has bounced off of its a moving average, 200-day moving average, it has ended 12 months up. So how could I use that information? What I do notice, actually not in this chart. Let me just show you what I did for May so I can tell you a little bit about what I'm going to do for June, because I'm going to save that a little bit for what I'm going to present here. But this is what I came in, I commandeered Uncle Roger's room. He was on vacation. I said, I am coming in. I broke in and I showed his great people my prediction for May, how I looked at it and how I came up with it. So there's my prediction. I said, hey, I think it's going to be down for the S&P. I said, I think it's going to be, and it's recorded, kind of this gentle top left corner here, kind of this gentle kind of move down. Well, if you look at the RSP, the equal weight ETF of the S&P, that is exactly what it is doing. That is exactly how it has performed. Here, I took this top left little squiggly line that I drew for everybody in Roger's room. Here, that squiggly line is up at the top left, and you can see it here on the right side of the chart, just kind of on top of there. May 1st is that kind of, what is that? You know, doji kind of looking-ish kind of candle there. That's May 1st, and there is the RSP down. So I'm using knowledge that I have gleaned over the last couple of decades from very valuable people that I choose to listen to, and I come up with that. So that's how I kind of do that short-term kind of trading using those options. Now I am going to come on. So I'm going to come on at 1 o'clock today. And yeah, someone had typed in, thank you very much, how well the trade, first trade is going so far. I've got a second trade that's going to come out today, actually. I think it's going to go just as well. Really excited about it because I use the same kind of process to help get me on the right side of the market, and I'm going to share it today. So like for June, asking the question for June, I think the biggest date I'm looking at for June is when the Fed comes out and makes their next announcement. We might see a little bit of a turn in the market before, based on what I'm looking at, which is seasonality, cycles, technical analysis, fundamental analysis, average true range, those types of things. What I'm seeing based on that is there's a potential for a little turn in the market. I'll share it with you later, but it's right at that time frame, not after, but right after or slightly before. That's it. But hey, here's that list of 52-week high stocks again.
Awesome. Awesome. So what, 1 o'clock today, you've got something, you've got an event going on, and we're going to talk about what you think that one trade is for June, huh?
Yeah, you betcha.
All right. All right. All right.
Perfect.
Excellent. Well, guys, you can click on that link right there. You can find out how to join Celeste. It's coming up in less than an hour, so I strongly encourage you to join.
Yeah. Yeah.
Thanks,
Really-
everyone.
Yeah. It was great a lot of great information, always so valuable. I listen to the recordings when I'm not here. I always go back and listen to the recordings because you guys have great content. So
Yeah. So yeah, no, this is great. And I don't know if Jeffrey's still on, but I really appreciate him being on. And Roger, Celeste, this is fantastic. And everybody, hop on this room. Oh, there he is. Jeffrey,
Hey, Don.
thank you very much for turning
Thanks
up.
for having us today, Don. Really appreciate it. We're already seeing great movement over in our portal from your audience. So thank you.
Oh, good.
Thank
Good.
you.
Yeah, just click on that link, guys, and you can find out a lot more information and just get signed up. And you'll be able to figure out what to do with your IRAs or everything like that once you get in. So
Very
just go
cool.
over there and try it out. Awesome. Thank you, Jeffrey.
Thank you.
Yes, and for everybody else, hop on, click this link right here. Celeste is going on and going live at 1 o'clock. Going to talk about that trade for June. The one for May worked out so well, so you got to do it, man. She's great.
Perfect. Have a great day, everyone. And I'll see you in the VIP room in about 10 minutes. Bye, everyone.
Thanks.
Awesome.
thanks, everyone.
All right. Thank you, Jeffrey. Thanks, Celeste.
Thanks,
All right, guys,
Don.
I'm
Good to
just
see
gonna
you,
hang out here
Celeste. Thanks,
just a second.
Roger.
Bye, guys. Bye,
everyone.
Jeffrey.
Bye-bye. Bye. Okay, so yeah, anybody else still hanging on? Just at 1 o'clock today, join Celeste. We will, I think it's a great opportunity just to get a new perspective. Click these links, all right, and we'll see you next week. Thank you all. Oh, Jesus.